Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me for this segment, we have Nick Mersch, portfolio manager at Purpose Investments, Kyle Chasse, founder of MV Global, and Les Borsai, co-founder of Wave Digital Assets. We're here to discuss the evolving digital asset ecosystem, regulatory structure, and a new wave of infrastructure and consumer applications. It's great to have all of you with us. Welcome to Trade Talks. Nick, let's kick this off with you. Now that we're talking about regulation and established guardrails here in the US, the industry is seeming to go through a new iteration and evolution more quickly than ever, considering how young the asset class is.
Yeah, that's right. And it's about time if you ask me. And I think you have to think about this as a new way of thinking about it in terms of re-regulation instead of deregulation. And over the past year, Congress really stopped jamming crypto into depression era style rules and instead asked, what does a digital first financial system actually need? And the result is this new playbook that treats blockchains as critical infrastructure. Now we have bank grade capital, audit, and anti-money laundering standards, yet there's still room for startups to experiment with smart contracts and DeFi. So I think of it as replacing stop signs built for horse-drawn carriages with smart traffic lights. And for builders and investors, the fog is really lifted here. We've got clear rules that are unlocking capital, talent, and long-term projects in the United States. So you've got the Genius Act, which I'm sure we'll get into, really built for dollar peg stablecoins, the Clarity Act, which really ends the whole conversation of is it a security or a commodity? And this used to be a guessing game, but these two acts are really providing a much more stable infrastructure to foster a lot more growth.
Yeah, and Kyle, speaking of fostering, I would imagine that being more pro-innovation as it relates to policymaking is reversing that brain drain that we saw out of the US and bringing that talent back on shore.
Yeah, I just literally got goosebumps again, like I did late last week when we saw the SEC come out and give a completely different perspective. You know, it's not just we've been battling rules and regulations. We've been battling as builders in the space. Public enemy number one historically was always the SEC, right? But now we have come out with a wildly different perspective from them just last week. And it was very pro-innovation, saying that essentially we need to adapt. Paul went on to kind of say how the SEC and Wall Street adopted from, delivering settlements by paper and the Wall Street can only trade Monday through Wednesday to now evolving to keep up with the times. And that's where we are today. And then you also had Trump Jr., Donald coming out recently just saying, we went all in on crypto, debanked, sued, shut out of legacy finance. We realized the financial system was undemocratic, and the answer is crypto. We got in out of necessity, not because it was cool, but because it made sense. This is just straight from the Trumps talking about this now. So the time is now.
Yeah, and unless I think part of it is too that we're actually seeing this as federal coordination. I mean, you do have bipartisan support here, and we're seeing significant developments because it feels as if it's more coordinated than, any other regulatory regime we've been exposed to.
Yeah, and I think the coordination really started, when this administration came into office and, he created a working group and the executive order, really calling for this report. And when we take a look at the different agencies, it was the CFTC, it was the SEC, it was Commerce, it was Treasury. And, everyone got together and really got on the same page. And, when Bo got that executive order out and now the digital report, we've really seen the progress, through everything that was outlined in that 160-page report the other day.
I also think it's encouraging, Nick, that we're seeing it broaden out beyond Bitcoin and we're starting to understand the fundamentals and other applications when you think about the institutional use cases for the digital asset space.
Yeah, that's right. And I think that the early kind of mover in this was Bitcoin particularly. But the way that I really like to see this is we're building a new financial wallet system. So if you picture tomorrow's wallet, we've got Bitcoin. So they're the digital gold. They sit inside and act as this finite supply, borderless transactions, and really self-custodied with a password, not a vault. Whether you're hedging inflation or sort of dodging local currency turmoil, very censorship resistant store of value. And then you've got Ethereum. So that's the app platform. So Ethereum's the wallet's app store, smart contracts so that you trade, borrow, or earn yield without a bank. And owning ETH is really just like holding gas in a global financial operating system, one that's open source and runs 24/7. Then you've got XRP. So they're the cross-border bridge. And XRP works really behind the scenes as that instant FX bridge. So banks convert dollars to XRP, beam it abroad in 3 seconds, and cash it out in local currency, potentially cutting remittance fees from 7% to under 1%. And then you've got Solana, the high-speed rail. So Solana provides the commuter rail, really hundreds of transactions per second with very tiny fees. So your subway tap, in-game purchase, or loyalty point redemption could all ride on the Solana rails without you even noticing. Then we've got stablecoins. Stablecoins such as USDC act as tokenized dollars, really clearing anytime, anywhere, and fully backed by short-term treasuries. And they really marry crypto speed with the safety of US debt, turning your phone into sort of this real-time dollar account that you can spend worldwide. So this is really a suite of products that have very specific functions that are reimagining the entire financial stack, and it's really opening back up.
It's funny, just to interrupt, Nick. I was listening to you talk, and you're so eloquent and articulate, and I can't help but think anyone in the administration who's new to the asset class isn't going to know what the hell you're talking about, because it's just, there's so much kind of underlying complexity in all of this. And, I think education and is going to be a real key because when we sit with these regulators and they really are at Bitcoin in some cases and just getting into what Ethereum is and I think that's the other natural thing that's going to also evolve. A lot of people are looking at ETH and why it's rising right now, and people don't realize that the stablecoin legislation is connected to ETH because the platform does stablecoins and DeFi. So it's just a really interesting time. And I think, really education is going to be so important for these people.
Yeah, it certainly is. And Kyle, you noted that as well, that you're seeing a lot of these apps and infrastructure, take away from that crypto complexity.
Well, I think one of the most interesting things right now is, I think it was last week or the end of the previous week, and we saw BlackRock come and submit their application to allow staking on ETH from their ETF. And so without even Americans understanding the fact that they're putting in dollars, they're buying spot ETH ETFs, and then BlackRock is now going to take that ETH and stake it and help secure the Ethereum network. So with Americans, without even knowing it or have to understand how it works, they just want to get yield. They want to get returns. But at the end of the day, now we have every American who's participating in the ETH ETFs participating in the security of the Ethereum network without even knowing it by securing the network just to get yield. And then we had the SEC come out a couple of days ago saying that now liquid staking, and this gets a little bit complicated, it doesn't really matter, but it just means that essentially it's a receipt for when you're staking, you get a receipt token, and DeFi, you can do stuff with that. And I think as America comes on chain, it's going to be this step by step. First, it was Bitcoin. Okay, now what is Ethereum? And like Nick said so eloquently, it's the app chain. And this is the institutional app chain. There's other app chains for games and things with less value, but for a lot of value, it's Ethereum. And so I think it's really interesting and cool how we are abstracting away some of that complexity. And now every American can participate in the security of Ethereum without even having to know it, right? And next year it'll be them, apps, and the year after it'll be something else. But now it's just step by step getting Americans on chain.
Yeah. And Les, you made a great point before about understanding who your audience is and being able to educate, because at the end of the day, by opening up our markets and providing the guardrails and the framework for it, and, being able to access the US markets via stable coins and so forth. I mean, there's billions of people who transact this way already. Now, if they're able to get access to our stable coins, they could buy treasuries, they could buy other, US asset classes. It's great for the American economy. And I think that's part of, what the industry has to advocate and make sure that whether it's policymakers or the average American, to Kyle's point, is understanding what this means overall for us.
Yeah, I mean, I think that's a really big part of it. And I've been fortunate. I've got to meet with a lot of states. And when I say states, that's treasurers to attorney generals, and get an understanding of, what they're doing with the custody that they have that they've either criminally seized or are going to start accepting. And, again, this administration pushing an agenda of not liquidating this asset class. Well, that does spill into the states because they have shared cases, for instance. So we're at ground zero with a lot of these states not even understanding, and they represent constituents in those states. So I think we're on the right path. And there's an awareness now that this asset class isn't going anywhere. So I think it's just our responsibility to dig deep with them so they do have a baseline understanding of how to handle these assets financially.
And Nick, give us an update on the Canadian crypto space because Purpose, you were the first to launch a Bitcoin spot ETF. So it's, it's something that certainly there's desire for there in that region as well.
Yeah, absolutely. And if you think about the kind of Canadian space, we were a little bit ahead on the regulation front. So we actually launched a lot of these ETFs about 2 years before they really hit the mainstream market. And what we really wanted to get behind was really the concept of the institutionalization of these asset classes. So I think it's really happening across three different levels. So the first is on the ETF level that we had mentioned. So the floodgates really opened with the spot Bitcoin ETFs. One of the largest ETFs hit roughly 70 billion in assets in 11 months, which was 5 times faster than the first gold ETF. And if we fast forward to today, we're now closer to 190 billion in AUM across Bitcoin AUM for the ETFs, whereas US listed gold ETFs are around 170 billion. So what we had here was this massive kind of flood in of capital, and overnight RIAs or investment advisors in Canada could really add Bitcoin with a mouse click and regulated reporting. And that growth curve really tells us that mainstream demand was never about ideology, it was about an easy and compliant wrapper. And when the world's largest asset managers move that fast, Bitcoin graduates from sort of this curiosity to a bona fide macro asset, one that now shows up in retirement statements. It shows up across a lot of these other registered accounts. And on top of that, we've got corporate adoption now. Public companies are getting crypto curious. We're seeing it across the board. Companies from tech giants to sort of mid-sized manufacturers really are treating Bitcoin as a strategic reserve, akin to sort of excess gold or foreign currencies. And then you also have the banks and payment giants stepping in too. So the plumbing is catching up. We've got JP Morgan, BNY Mellon, State Street now offering institutional crypto custody. So this is bringing trillion-dollar balance sheets and brand name compliance into the space. For the rails, we got Visa and MasterCard working on USDC settlements on Ethereum and Solana. So a lot of these components really led to the institutionalization of this asset class, and we wanted to really get behind that in a big way. And I think it's only getting started here, really.
And Les, from a regulatory perspective, what's in the pipeline? What should the industry be watching? What's next?
Well, look, I think DeFi is definitely in the pipeline. DeFi is something, I mean, tokenization and DeFi are something this administration is thinking about. I don't think everyone has a good understanding of what DeFi is, but this administration is definitely going to push for it. And, just to echo something else that Nick said, Canada was really early. I remember going to Canada in 2017 to Ripple Swell, and, some of their banks like RBC, were the earliest adopters in cryptocurrency. And I think what's really interesting when we talk about how important regulation is you see this administration come in where other countries are so far ahead of us because of this SEC fighting us by enforcement, and now we see everything shift, and you see innovation coming back here, and we're starting to kind of pass everyone, which is really, really great. But look, I mean, I think clarity has to pass. We need to understand if it's going to be the CFTC or the SEC, and what parts of the asset class they're going to handle. That's what clarity is about. I think the anti-CBDC bill is very clear in terms of a digital currency, and I think we're just going to see it involved. The other thing I'll add is these digital reserves haven't really been flushed out in the report. It wasn't really mentioned that much. But we're going to see the other side of, the finance markets open up. Debt is going to be a big thing that opens up down the road here.
Yeah, it certainly will be. And Kyle, to wrap up here, what about the macro environment? Certainly it has been more volatile than perhaps expected for 2025, but how is the digital asset space absorbing that? What are your thoughts on that?
Yeah, the macro environment does fundamentally seem to be pretty volatile. However, Bitcoin and Ethereum are nearly at all-time low volatility. The volatility index is extremely low, which is usually historically in our markets is kind of the calm before the storm. And it's kind of when people get bored. I mean, Bitcoin's been trending sideways between, basically all-time highs, this whole range that we're in right now. But I think, there's one more thing I really want to, that potentially we see today is an executive order being signed to allow crypto into the retirement accounts, 401ks. We've got about 37% of the entire U.S. stock market sits inside of these 401ks and retirement accounts. If even a fraction of that value goes into, of Bitcoin and Ethereum go into these retirement accounts, I mean, we're talking about influx of, easily hundreds of billions probably in the first year, but even trillions over time.
It's funny. I just spoke at a pension conference. I was one of, I mean, two crypto guys there, and it was amazing that the states walked up to me afterwards saying they could now take exposure. So the future is
Wow.
definitely changing. When we see pension funds that are connected to these different states being able to take exposure in this asset class.
Yeah. Well, I mean, less argument could be made too that there is certainly more of a desire than has been in the past for pension funds. You can even call insurance companies as well to
Yeah.
get access to alternative investments because of the yield that they offer, and not be so married to a 60-40 portfolio as an example. So
Yeah.
you can make the argument that digital assets fits into that.
Yeah, and you can even add to that argument and say a lot of people are buying Michael Saylor's preferred because there isn't another option just yet. That is straight, fixed. So it's going to be an interesting time to see. I mean, the other thing is look at what he thought he was going to issue. I think the number was 250 million in his mind, and he did 2.5 billion of
Yeah.
issuances. I mean, that tells you the demand.
10x isn't bad from what your expectations were. All right, guys, appreciate your insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Joe.